Today is Friday, October 12th, 2018. My name is Erin Rumley, and this is your weekly market review. So it has been a very interesting week across the three indexes, SPX, NDX, and RUT. We started the week really flat. For Monday and Tuesday, we were pretty much sideways, taking off from where we had traded on Friday, a little bit of that sideways movement. And then we had this strong movement lower, a continued movement lower. And then today, we had a little bit of a rebound, but we didn't end up with a higher high. So we don't have a strong direction based on this market movement. Now, based on our Bollinger Band snap, we did expect to see some sort of pop, some sort of reversal, a little bit higher based on how low we went yesterday. But we didn't quite make it out of that Bollinger Band snap, and we didn't quite make it to the retracements, the Fibonacci retracements that we are tracking. So there's a possibility that there's more really recovery in store here before we continue to move lower, if we're going to continue to move lower. We have no weaknesses in the momentum. Our momentum indicators still indicate a further decline. Stochastics is starting to pinch together, but of course you can see that we have a false bar there on the bottom. So we'll see how much more movement we have left to the downside. 10-day moving average is still below our 30-day moving average, and we're still trading below the 100-day moving average. So right now, there's no signs that show that we could have a strong corrective rally back up to an all-time high. But we do see the possibility for a little bit of a bounce here before potentially moving lower. Now, we know that the support level that we discussed yesterday did end up holding, and we'll remove this other support level away. So we had a support level yesterday that did end up holding. We bounced up. We'll see if it ends up holding again if we start to cycle back down lower. Now, we were able to take advantage of this movement, this decline that we saw by closing out of our straddle for a profit. So now what we're looking for is an opportunity to get into a new position, and it may be right back into a straddle so that we are nicely balanced for if we do end up cycling up higher, or if we break support and end up moving lower. Or if we do one first and then the other, of course, we can always choose to leg out of that straddle. On our intraday chart on SPX, we are seeing some signs here of a potential rising momentum. Of course, we're working against that false bar. We did barely make it above our 10-day moving average, but then, of course, closed below that. So we're still using that as a sort of resistance here. 60-minute chart, stochastics, and AO, you can see that we're seeing some rising momentum there. 30-minute chart, also seeing some rising momentum, rising twin peaks as well. But we're also getting back up into the top of the range, and we know that that can also be a setup for further decline. So let's be patient here. Let's see how much more movement we have to the upside. Of course, there's a possibility to go to about 2,800 and 2,852, depending on how much of a corrective bounce we end up doing. If we hit those levels, we'll look for indicators to time out position to either go short or to give us some balance on a nice neutral bias position. Now, NDX is different than SPX because it ended up having a higher high and a higher low. We didn't break the high on SPX, but NDX we did. So we have the higher high and a higher low today, really moving right up to about that 382 retracement that we saw. A little bit shy of that with the 382 at 72.01 and us going to 71.79, but fairly close. We'll see if there's more upside potential as we do have a crossover to the upside on stochastics. 2-hour chart pointed higher, rising momentum, and we moved above our 10-day moving average. 60-minute chart Now we'll see if we can move above that 30-day moving average, but right now it's acting as resistance. And of course, we have rising momentum. 30-minute chart, we've crossed over the zero line on the AO. Stochastics is pointed higher, and of course our false bar did not print throughout the day today. So there is possibility for further recovery, especially with what we're seeing on stochastics on the daily chart, potential for further recovery here. But with our moving averages and what we've been discussing with those moving averages and the Elliott wave count that I've been referring us to, there's potential for us to end up cycling back down lower. Now, we all know what I've been talking about with RUT. And look what it did today. We have a lower low and a lower high. So right now, this Fibonacci retracement is not accurate because we did not create that low. So we continue to move lower on RUT. We've talked about what that means for potentially for the other indexes. So we'll just be patient a little bit here as RUT continues to have declining momentum and continues to print that false bar on the bottom for the daily chart. We talked about yesterday how we've broken through support levels. We continue to break through support levels. We'll have to wait for another natural level of support to make any sort of adjustments to our rising channel to get an idea of where our bottom is going to be if we're going to be starting a new declining trend. We still need to form a natural level of support. We continue to trade in lower Bollinger Band snaps without really a strong corrective move off of those. And I think that makes sense based on what our AO looks like and our stochastics and, of course, the moving averages. 2-hour chart, still false bar on the bottom. Yeah, we have rising momentum, but just one bar of rising momentum. Yes, rising momentum on stochastics as well, but you can see that we continue to have declining twin peaks on our AO. And of course, that false bar on the bottom and our 10-day moving average acting as a resistance. 60-minute chart, yes, last bar had rising momentum, and then we have rising on stochastics as well, but false bar still on the bottom there. Let's be cautious here. 30-minute chart, yes, we now have rising twin peaks, rising AO, rising stochastics. There is that false bar still on the bottom. Based on what the daily chart for RUT is telling me, is that there's potential for us to have further decline here, especially with us having that lower low and that lower high. And of course, we know that what that can mean then for the other two indexes. Now, volatility came back a bit today. We, of course, had our spike yesterday, but we still have a false bar on the top. Something I'm paying attention to is the crossover to the downside. Now we still have rising momentum here. Moving averages are still rising, but we'll see how that crossover plays out. It's just barely a crossover here. If we expand that out, they really just came down to touch each other here today. Not a very strong crossover. We'll see where it is on Monday, because if we do end up seeing signs of declining volatility, we know how then SPX could potentially react, and we can look for a consensus of signals between the volatility, the VIX, the volatility of the S&P 500, and of course, SPX. So for right now, being patient, SPX and NDX do look like they want to bounce a little bit higher before potentially moving lower, but I'd like to see some confirmation on our momentum indicators on our AO and stochastics. RUT on a daily chart still looks to be moving lower, especially with today having a lower low and a lower high. And so because of that, we're still looking to time out some sort of corrective bounce. And of course, when we form a natural level support, we can use a Fibonacci retracement to estimate where we can really have a corrective move up to. So for right now, we're going to hold. We did not open up a trade today. We talked about yesterday how this spike in volatility had increased the individual option prices. So we're going to hold for right now. Did not want to open up a trade right before the weekend. We'll reevaluate on Monday. I may be looking at a straddle. I've also talked about if we are forming a bottom, which we'll use a consensus of signals to confirm, then we may be wanting to open up a credit spread to take advantage of that move higher. But for right now, let's remain patient here. And of course, as soon as we do take any action in our account, we will send out a profit builder trade alert. If you're not a current client of Options Moneymaker or a subscriber of our Profit Builder Plus education program, for more information on the types of strategies and technical signals that I discussed today, you can check us out at optionsmoneymaker.com/Profit Builder Plus. Thank you all for joining me today. I hope you all have a wonderful weekend, and I'll be back with the daily market review on Monday.